I will also say, since we're talking about it, between now and the September meeting, we get 2 more job reports, 2 more CPI reports. I think we have an ECI report coming later this week, which is Employment Compensation Index, and lots of data on economic activity. All of that information is going to inform our decision as we go into that meeting. I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that meeting. We're going to be making careful assessments, as I said, meeting by meeting. And I'll close by saying we've raised the federal funds rate now by 525 basis points since March 2022. Monetary policy, we believe, is restrictive and is putting downward pressure on economic activity and inflation. I think you take everything into account when you start cutting rates. It would depend on a wide range of things. And when people are writing down rate cuts next year, you know, it just is a sense that inflation is coming down and we're comfortable that it's coming down and it's time to start cutting rates. I think, but I mean, there's a lot of uncertainty between what happens, you know, in the next meeting cycle, let alone the next year, let alone the year after that. So it's hard to say exactly what happens there, what's motivating people.
So if it's sort of stubbornly in maybe the high 2s, you wouldn't necessarily cut rates.
I'm not saying that at all. I'm not giving you any numerical guidance around that. I'm saying we'd be comfortable cutting rates when we're comfortable cutting rates, and that won't be this year, I don't think. It would be, but you know, many people wrote down rate cuts for next year. I think the median was several for next year, and that's just going to be a judgment that we have to make then, a full year from now, and it'll be about how confident we are that inflation is in fact coming down to our 2% goal.